Here are 10 areas that could be worth considering. 1. Agriculture. Uganda is known for its fertile land, making agricultural investments promising. 1. Opportunities include crop farming, livestock rearing, and agro-processing. As an investor, I believe the agricultural sector in Uganda presents promising opportunities. Uganda is known as the Pearl of Africa, due to its favorable climate, diverse agro-ecological zones, and abundant natural resources, which create a conducive environment for agricultural activities. Here are some factors that make Uganda's agricultural sector attractive for investment. 1. Abundant arable land. Uganda has a significant amount of fertile land available for agricultural purposes. 1. With approximately 80% of the population engaged in agriculture, there is a strong foundation of agricultural expertise and a ready labor force. 2. Favorable climate. The country enjoys a tropical climate, providing ideal conditions for the cultivation of various crops such as coffee, tea, bananas, maize, and other fruits and vegetables. 2. This diverse range of agricultural products offers multiple investment opportunities. 3. Growing domestic and regional demand. Uganda has a large domestic market for agricultural products, driven by a growing population and increasing urbanization. 3. Additionally, the country's proximity to regional markets in East Africa presents opportunities for export-oriented agriculture. 4. Government support. The Ugandan government has prioritized the agricultural sector and implemented policies aimed at promoting investment, such as tax incentives, land reforms, and access to credit facilities. 4. They have also initiated programs to improve infrastructure, irrigation systems, and agricultural research and development. 5. Export potential. Uganda is already a major exporter of agricultural products like coffee, tea, and horticultural produce. 5. There is room for further expansion and diversification of export crops, leveraging trade agreements and increasing access to international markets. However, it's important to consider some challenges as well. 1. Infrastructure limitations. Despite recent improvements, infrastructure challenges such as inadequate transportation networks, storage facilities, and post-harvest management systems remain. 1. Addressing these limitations would be crucial for maximizing the sector's potential. 2. Access to financing. While the government has taken steps to improve access to credit, obtaining financing can still be a challenge for small-scale farmers and agribusinesses. 2. Investors should explore partnerships with local financial institutions or explore alternative financing models to support their ventures. 3. Climate change risks. Climate change poses a threat to Uganda's agricultural sector, including irregular rainfall patterns, droughts, and floods. 3. Investors should consider sustainable and climate-smart practices, including the adoption of appropriate technologies and irrigation systems. Overall, with the right approach and due diligence, investing in Uganda's agricultural sector can be a rewarding endeavor. It's advisable to conduct thorough market research, establish strong partnerships with local stakeholders, and leverage the various support mechanisms and incentives provided by the government. 2. Real estate. The rapid urbanization and population growth in Uganda have created a rising demand for housing and commercial properties. Investing in real estate, including residential. As an investor, evaluating the real estate sector in Uganda would involve considering various factors to assess its potential for profitability and long-term growth. Here are some key points to consider. 1. Economic growth. Assess the overall economic stability and growth of Uganda. 1. A growing economy with increasing disposable income and a stable business environment can drive demand for real estate. 2. Population growth and urbanization. Examine the population growth rate and the trend of urbanization in Uganda. 2. Rapid urbanization often leads to increased demand for housing and commercial spaces, which can be favorable for real estate investments. 3. Infrastructure development. Evaluate the government's commitment to infrastructure development, including transportation, utilities, and public amenities. 3. Improved infrastructure can enhance the value of real estate assets and attract potential investors. 4. Political stability. Consider the political stability of Uganda, as a stable political environment fosters investor confidence and creates a conducive atmosphere for long-term investments. 5. Regulatory environment. Evaluate the legal and regulatory framework governing real estate in Uganda. 5. Look for transparent and investor-friendly regulations that protect property rights and facilitate ease of doing business. 6. Market demand and supply. Analyze the demand and supply dynamics of the real estate market in Uganda. 6. Identify areas with high demand for residential, commercial, or industrial properties and assess the market saturation levels. 7. Rental yields and capital appreciation. Examine the rental yields and potential for capital appreciation in different segments of the real estate market. 7. Consider factors such as rental rates, occupancy rates, and historical price trends to gauge potential returns on investment. 8. Risk factors. Assess potential risks such as currency fluctuations, inflation, interest rates, and geopolitical factors that could impact the real estate sector in Uganda. 8. Diversification and risk management strategies should be considered. 9. Local partnerships. Consider partnering with local real estate developers or professionals who have experience and knowledge of the Ugandan market. 9. Local expertise can provide valuable insights and mitigate risks associated with unfamiliarity. 10. Sustainability and environmental factors. Evaluate the sustainability practices and environmental considerations within the real estate sector. 10. Increasingly, investors are prioritizing environmentally friendly and socially responsible projects. Remember, investing in real estate carries risks, and thorough due diligence is essential. It's advisable to consult with financial advisors, conduct on-the-ground research, and assess your investment goals and risk appetite before making any investment decisions. Thank you for watching and subscribe to the channel for more videos. Don't forget to turn on the notification bell for part 2.